I've been in the angel space for about a decade now. I'm Executive Director of the Angel Association New Zealand, but I co-founded Angel HQ in Wellington about 10 years ago. And so I've literally seen dozens and dozens and dozens of people in your position who are starting out looking to raise capital. And governance is a really critical piece of it because it's fundamentally about getting the team around that you need to be able to kind of give you that kind of direction and guidance as to where you're going to best and most neatly raise value. We've just done a survey recently of founders and asking them what they most got from one of the things that they were most grateful to get from their board and from their investor director, and they have indicated in a number of occasions that it's the emotional support. And that's where a startup or high growth board, a board where you're raising capital, differs perhaps a little from a more conventional corporate. Is that sort of real kind of, and in fact, as a colleague said this morning on a panel I was at, that it is like a marriage. You know, it really is, you're going down this path for the long haul. In a startup space, a board is your kind of, for me, is the entity that gives you the strategic oversight. You'll be in amongst it. You'll be doing the doing. There will be times when you won't be able to see the wood for the trees. A board should be able to give you that. A board is your strategic oversight. It's providing your guidance, is your ability to stress test stuff. And I think in the angel space too, we're not so much looking at risk and compliance. We're looking at risk and reward. And so that's always another really important part of governance and a board in this space. And you're looking to have a board, a formal kind of board, perhaps not necessarily when you first raise that very early seed or pre-seed round. So I'm talking anything from sort of 100,000 through to maybe 200, 300, perhaps tops 400,000 or 500,000. But beyond that, when you're raising an angel round or you're raising any kind of formal capital, which is, 500K through to, could be anywhere up to sort of 2 or 3 million, but probably it'll be around about 500K to 1.5 million. At that point, you will need to have a board to have credibility and give your investors confidence that you are willing to have other advice and take on that advice. And the governance piece too gives follow-on investors confidence that you understand what it takes to scale, that you're going to need more than just you. Nobody does the stuff alone, and the board is the first kind of formal recognition, one of the first formal bits of recognition that nobody does this alone. And ideally, a board for a startup, a high-growth startup, it won't be any more than at the most 5, and our American colleagues sometimes think we're over-engineering it to have 5, that sometimes New Zealand startups are over-governed, but having 3 is probably okay as well. But it's really getting your first board in place too is also kind of getting the foundation right and the structure right, so that when you scale fast, you've got people around you who can help you do that. And your board will have a range of different skills on it, primarily around the vertical or the area that your startup is involved in, somebody who's maybe done it before. Other aspects of the board are that you will need someone who is perhaps well-connected, connections, people. Nobody, we often talk about the fact that when you're raising money, it's not really the money that you're raising, it's the people that you're buying, it's the connections that you're buying that's the really critical piece. I think the really important thing is that when you are looking for that board member, that you go 2 or 3 deep, and once you've done that, you'll have a really clear sense of whether or not that person is the right person to be on your board. Don't forget to do that.